Let's talk about the 11 things you should do if you have $1,000. Make sure you stay until the very end because I've saved my personal favorite tip for last. Also, please give this video a thumbs up and subscribe and click the bell. That way you'll be the first to see my next money-making video. Number 1, begin building passive income. Passive income works by having an investment that pays you income month after month and year after year. With enough passive income, your day job is no longer a necessity. The answer to financial independence is to create enough passive sources of income that you can rely on them alone to pay your expenses. Bonds, rental properties, dividends from stocks, businesses, and a variety of other sources can all offer passive income. If you have enough passive income, you'll be less reliant on your job and will get closer to retiring early if that's what you want. Thousands of dollars are required for income-generating investments like rental properties, but there's others you can invest in for less than $1,000 and begin earning money right now. Don't work for your money. Have your money work for you. Number 2, make an emergency fund. Everyone should have an emergency fund. The recommended amount varies considerably, but no one is immune to surprise charges, thus everyone should plan ahead for unexpected bills. According to conventional thinking, an emergency fund should contain 1 to 6 months' worth of living expenses. The more irregular your revenue or costs are, the more money you should have in your emergency fund. A high-yield savings account is a good place to start. Banks currently pay between 1.5% and 2.5% interest in today's accounts, which may at the very least keep pace with inflation. Savings accounts are FDIC insured and entirely liquid, giving you quick access to your funds in an emergency. Your emergency fund, on the other hand, does not need to be restricted to savings accounts. Some individuals have many accounts that they can use in an emergency to minimize the cost of keeping so much money in low-yielding accounts. Money market accounts or funds, short-term government bonds, low-volatility stock funds, and unused credit cards are just a few additional accounts that might be used. Number 3, pay off unsecured debts. Unsecured debts such as student loans, credit card balances, and personal loans typically have higher interest rates than secured debts like mortgage loans and automobile loans, since they are secured by collateral. One of the first things you should do is pay off your credit card balances. Credit card debt is a serious issue since the average credit card rate in the U.S. is over 17%. You can save money on interest by opening a low APR credit card that allows you to make transfers while paying off your debt. Student debts and personal loans might hurt your financial stability and damage your credit score. Even if you want to allocate money towards other financial goals, such as a down payment for a new car or retirement, set aside additional cash each month to get rid of all unsecured debts as soon as possible. Number 4, start an IRA. Everyone needs to think about saving for retirement. The day will come when you no longer want to work or are unable to. Given the rise in older employees being forced out of their jobs, we all have less control over when we retire than we think. Individual retirement accounts, or IRAs, are a simple method to invest for retirement. These accounts come with significant tax advantages to sweeten the pot. Traditional IRAs deduct funds contributed right away, while money put into a Roth IRA is tax-free until you take retirement withdrawals. The best part is that these accounts are extremely easy to set up. You can open them through any investment brokerage such as Vanguard, M1 Finance, or Robinhood. In only a few minutes, you can open an account online and start investing for retirement right away. Number 5, start a taxable brokerage account. While you are in the process of opening an IRA, also open a regular taxable brokerage account at the same time. You may put your money into stocks, bonds, REITs, and mutual funds through both your brokerage account and your IRA. Your retirement account, on the other hand, has limits and penalties if you withdraw funds before retirement. Your taxable brokerage account, however, is far more flexible. You can contribute, buy, sell, and withdraw funds as you choose. Many new investors are put off by the procedure of establishing an account and selecting assets, but they don't have to be. The process is straightforward, and if you're not sure what to invest in, start with a few index funds that give you broad market exposure. Consider a fund that tracks the S&P 500, one that invests in small cap firms in the United States, and one for foreign companies. Alternatively, you can have all the say in where your investment choices go. Examine a few of the top robo-advisors to discover free or low-cost investment advice and let them automate your financial decisions for you. Regardless of how little you put in, the most vital aspect is simply to open the account and make your first investment. Number 6, buy life insurance. Anything can happen at any time, and if you're the dominant income earner in your family, you could leave them with no immediate source of income if you were to have an unforeseen death. Begin by looking over the many forms of life insurance available, since many policies differ considerably. Check out online quotes before choosing one insurance provider and investigate internet-based firms, which often provide cheaper premiums than brick-and-mortar insurance corporations. It is not necessary to have a costly policy. Everyone's circumstances are different, so decide how much life insurance you require and keep in mind that you can start with a cheaper policy for a few dollars per month and gradually increase your coverage as your family's needs change. Number 7, put more money into your employer-sponsored retirement account. Everyone should contribute whatever portion of their employer's match is available to them. It's basically free money. However, far too many workers stop there and do not increase their retirement accounts any further. The huge advantage of employer-sponsored retirement accounts such as 401ks, 403bs, and even simple IRAs is that you can contribute far more to them each year than to your IRA. If your IRA contributions have been used up, consider amping up your contributions to your employer-sponsored retirement account. You can save money on your taxes while also accumulating a nest egg to retire wealthy. Number 8, save for a down payment on a house. Home ownership is not for everyone. Some people dislike the hassles of maintenance and repairs, or they move too often and need flexibility. But others dream of owning a home that they can fix up like they want. If that's you, now is the time to start planning on ways to come up with a down payment. If you have a Roth IRA or other retirement accounts, you have ways to tap into them for a down payment. High-yield savings accounts are a fantastic location to put money away for your down payment, much like Roth IRAs. To encourage yourself to save more money, refer to the account as House Down Payment Fund, since this will help you remember why you're putting so much money into it. Use services that compare loan quotes such as LendingTree and Credible once you're ready to buy a house. Finding the cheapest loan prevents a lot of lenders from pulling your report and possibly ruining your credit. Number 9, invest indirectly in real estate. If you're new to investing, you might believe that buying real estate in the form of a physical property is necessary. However, in today's environment, it is considerably easier than ever to invest in real estate indirectly with only a few clicks. REITs or mortgage REITs are an option that has stood the test of time. They may be purchased through individual retirement accounts, IRAs, or brokerage accounts. REITs, on the other hand, are heavily regulated by the Securities and Exchange Commission and are mandated to pay out 90% of their profits as dividends. This implies that they are unable to develop their portfolios and, as a result, the value of their holdings. Private real estate crowdfunding websites have recently emerged as a rival to publicly listed REITs. Several entities have recently expanded their investor pools and made it possible for anybody to invest, such as Ground Floor, Fundrise, and DiversiFund. Number 10, upgrade your health care coverage. If you have very little health coverage or none at all, now might be a good time to upgrade your coverage. We all believe we are unbreakable until the universe reveals otherwise. Buying a traditional health insurance policy is one way to go. It also may mean establishing a health savings account, or HSA, to store money tax-free to augment a high-deductible insurance plan. HSAs in particular provide the greatest tax advantages of any tax-sheltered account with triple tax protection. Your contributions are deductible, the assets grow tax-free, and withdrawals are tax-free when used for health-related costs. If you don't have health insurance through your employer, explore all of the options for receiving coverage without a traditional full-time job. You could be shocked by some of the alternatives currently available on the market, given how quickly the industry has developed in recent years. Before I move on to my favorite tip, please give this video a thumbs up and subscribe and click the bell. That way, you'll be the first to see my next money-making video. Also, comment down below and let me know what you're going to do with your $1,000. Number 11, start a side hustle. According to research published by Fortune, over 43% of Americans with full-time employment have a side business or side hustle. You can invest in rental properties for extra income or earn money by blogging. Side jobs provide you the opportunity to create something of your own while earning additional money. Your hobby can even be turned into a business in many instances. Look for ways to start your business on the side if you're worried about the risk of quitting your full-time job. Start small, keep your job, and save as much time and money as you can. And speaking of a side hustle, click the video on the screen to see my top 20 side hustle ideas to help you make some extra money today.